Good evening. Welcome to the last Shadow Trader video weekly of the year. I'm your host, Peter Reznicek from ShadowTrader.net. Very interesting week this week as we had a heck of a lot of short covering. We had something called back-to-back spikes on Wednesday and Thursday. I'm going to show you exactly what those are and why I think they're bearish for the market going forward. The media this week also focused on the fact that Wednesday, the market was up over 1,000 points on the Dow Jones Industrial Average. I'm going to show you some key nuances in market profile that will prove that this was nothing more than short covering, and we probably go lower from here. And last but not least, Chartapalooza. We're going to go through a whole lot of monthly charts. Since it's the end of a month, end of a year, I'm going to show you the monthlies on the S&P, Dow, NASDAQ, FANG stocks, and a few key sectors, and we'll see what direction they're pointing to for 2019. All right, let's get at it.
Okay, so I thought I'd start off with this chart of the Dow, which is not a chart that we talk about very often at all, because I wanted to focus on what happened on Wednesday, and the media was really all over this, and everybody's talking about, wow, the market was up 1,000 points, which it was. The Dow advanced over 1,000 on this day in relation to the prior day's close, and it was certainly a very, very bullish day on the surface, I think, but when I get deeper into the profile, I'm going to show you guys how it really wasn't to me because of the nature of the advance, and this is where I really believe that market profile charts really give you so much depth and tell you the real story of the thing, because market profile charts add that extra layer of time. Notice that the chart that we're looking at right here, it's very, very two-dimensional. It's just OHLC. It's open, high, low, and close. But we have no idea how much time was spent at each specific price. And we also don't have any idea as to when, over the course of the day, the moves occurred. We only know that the market opened down here, for instance, on this type of chart. We know that it opened here and it closed here. But understand that it's a whole different scenario as to when the market advanced or went down. This not entire advance, but a huge portion of this advance happened late in the afternoon. That's a whole different story from when it happened steadily during the course of the day. And the same exact thing actually happened the next day. And this is where we had what I call the back-to-back spike phenomenon, and that's what I want to show you right now on the profile charts. So looking at this ES, this is the first day in question, which is 1226. You're going to focus right here, actually. It's hard to get it all scrunched on one page, but you're going to focus basically on this 1226 day and everything that's lined up with that day. So first I'll make it a little bit smaller so you can see it. And again, because the day was so huge, it's hard to show the entire thing. But again, we're looking just at this particular day right here, and notice that if we scroll it up, it goes all the way down to here. Okay, so first things first is you want to pay attention to what type of structure was occurring on this day. Structure is a question of how wide the profile is, whether or not there's little anomalies like this, which is little things sticking out, and also whether or not you have areas of single prints like this, which show a lot of emotion. The first thing you want to notice is that the entire profile is extremely stretched out. It's very thin. Notice that this profile here on the 27th has some width to it here, but there's absolutely no width in the profile of the entire day on the 26th. That tells you right off the bat that the buying that was occurring on that day was very, very emotional. Basically, the reason the profile is thin is for the simple fact that not a lot of time was spent at every particular price. Therefore, those prices are less fair than if more time was spent at those prices. As the market advanced over the course of the day, also, we keep track of the volume that is occurring at every single price level. That's this column here on the 26th. Well, something should jump out at you right away, and that is the absence of 10,000 prints or more, right? 10,000 contracts or more at each price. 10,000 is the base amount that I look at to see if there's more or less fair price at that level. Basically, if a level is going to be fair, for lack of a better word, at least 10,000 contracts should change hands there. If they don't, I call that a taper. When the market goes up to a top or comes down to a bottom, generally the amount of contracts traded at each level will fall below the 10,000 mark, and you'll start seeing a lot of these 4-digit numbers, and that's how you know that there is strong possibility that the low of the day is coming pretty soon, and the high of the day, or the high of the day, I should say, is coming soon. For instance, you would see that down here on this particular day. Notice that the numbers start to taper. They're obviously all well below 10,000, but notice also that they taper down to almost nothing. And when you see that small print at the very bottom, I've talked about this many times, that is, I would say, 99 times out of 100, the lower high of the day. As soon as you see that print, boom, where there's a very tiny number, usually less than 100, you know it's over. Now this day in particular, this 1226, is really interesting because watch, I'm going to scroll it up very slowly, and I want you to see if you can see the 10,000 contract levels on the 26th. And again, this was the day that the market was up 1,000 points on the Dow. So if I just scroll it up, and again, you're looking right here in the center of your screen at these numbers, let's see where we find the first, how high we have to go before we find the first 10,000 contract print, which level. There's 7,800. That's the point of control, by the way. We'll get more into that in a second. Still going. And look at this. In the middle of the distribution, in the value area, no less, look at these tiny numbers. Still scrolling. Still scrolling. And again, we're still focused on this middle column. Still going. Still going. Still going. And there. Where were the 10,000 contracts? Nowhere. The entire day did not have a single price level where we traded more than even 7,800 contracts or whatever that number was, and that was the point of control. This is very, very interesting. I have never, ever seen this, ever. Notice that a normal day looks like this. This is what a normal day looks like. Okay, see all the contracts? Where the profile gets fat, you have lots of contracts there, right? Here's what we saw on Friday, for instance. Look at all the different, see the levels? How many contracts change hands at each price? So think of it this way. Usually when you have the small amount of contracts at each price, it's an anomaly that you just see for a short while, either as the market is topping or as the market is bottoming. You get what I call the taper. The volume tapers down or it tapers to the upside. So first point is that it's very, very interesting to note that this day that the Dow was up so much, we had such thin volume all over on the futures, and it makes perfect sense. Why? Because the buying was very emotional, and the buying was nothing more than short covering. When you have new money buyers, which I like to refer to as new business versus old business. New business tends to sit on the bid and wait for the price they want. They don't buy out of panic like that. They don't, they're not in a situation where it's like, get me out of this short right now. That's what we saw. And as the market traded up on 1226 and had this huge kind of action where there was no volume, the next thing I want to point out is that it created what's called a spike. And a spike is when you have single prints that happen at the end of the day. So notice this is the afternoon on the ES of 1226 where the single prints occurred, and notice that it goes all the way from 24.23 all the way up to a high up here of 24.77. It's over a 50-point range of nothing but single prints, and we call it a spike because it denotes that it is single prints that happened in the last period of the day, and then we have to wait for the next day for to see whether or not those higher prices are accepted or rejected. Did the market auction high enough the next day to find some sellers or not? Is it going to accept those prices and deem them fair? This is also a very, very important point because you have to understand that larger players in the market do not get active in the late afternoon like that. If they're going to be active, if they deem that it's a day that they're buying, they're going to be accumulating and they're going to be doing it all day long. They're also not going to be doing it by just slapping the mouse at 2 in the afternoon and buying at market because they think this is the bottom of the market. Remember, the larger players make all their money in the middle. The innovators make their money at the bottoms and the tops, but the innovators are few and far between, and the innovators are usually retail traders. They're smaller people. The bigger players are generally not innovators. They make their decisions by consensus, and they need some confirmation that the market is safe to go back into before they get long. So this is why I think that the move that we saw on Wednesday was really nothing but short covering, given that we had the spike. That takes us into Thursday. Thursday, the market came in a bit and then started to rally, and notice that when it started to rally, same phenomena, right? Now we're focusing here on 1227, which is all of this action here, and notice the thin volume again with the spike, and no volume all the way up. And here, notice again the spike, single prints late in the day, late in the session. End period is our last period. There is also O, Look how high it goes. O is the shortened period. And again, no volume all the way up, culminating in 4 contracts on the high, which is always the end of the move. So basically you have 2 days in a row where there's back-to-back spikes, where you have very late day action, pushing the market really hard to the upside, buying at market, but very, very poor structure. At the same time, the last thing I want to point out is on both of these days, earlier in this video, I talked about prices being fair or not. Remember, the fairest price to do business, quote unquote, is always the point of control. The point of control is that one price level in the market profile distribution that has the most volume traded that day. On a day that's trending, you would expect that the point of control would migrate higher and move towards the top of the range by the end of the day. On both Wednesday and Thursday, that did not happen. Notice that the point of control, if you remember, is down here on Wednesday. I pointed that out already. It's that level there that had 7,800 contracts. It's all the way down at 2380. So it didn't migrate up with price at all. It was very low in the distribution. And then the next day, which was Thursday, where's our point of control? It's all the way down here, not up in the spiky area. It's at 24.23. So it also didn't migrate higher with price, because notice that after that, price went way higher. Huge spike. Price moved off of that 24.23 and went all the way up to 24.98, almost 2,500. So almost 80 points higher after that, and yet the point of control remained low. All right, that takes us into Friday, whereupon we had what I believe you could almost call like a little mini spike, but not really. It's not a spike unless this happens in the end of the day, but we definitely had some taper up here. Notice that the volume tapered all the way down to here. That makes sense. So the buyers were getting a little bit tired. And what happened then? We ended up closing just a little bit down in relation to the prior day. The red boxes are the settlement. And again, same thing with the point of control. Point of control all the way down here at 24.84. So in relation to what went on in the current day, it didn't migrate higher with price, even though price went much, much higher. All right, so these are the specifics as to why what I'm seeing in the market seems to me thus far over these 3 sessions as nothing more than a lot of rampant short covering. It's also the end of the year. I don't believe that institutions are busy on the last 3 trading days of the year. It just doesn't make sense to me. I believe they've closed their books. I believe most of those desks are empty. I think they've gone home for the year. Bonuses have been paid. Whatever they've either made or not made in 2018 has already been set in stone, and that's that. So that's the situation there. All right, let's get into this Chartapalooza. Let's look at these monthly charts as I was discussing of the S&P, Dow, and NASDAQ, and FANG. All right, so kicking it off with the SPX. Again, we're going to stay on just the monthlies. Now, it is understood that we do have one more trading day to go, 12/31. So the monthly chart isn't completely completed yet, but for the most part, it's almost completed. But we'll see what happens on Monday. But your focus really has to be here on the 2200 and also on the 2300. I'm also pointing out that usually when you have large declines on the monthly charts, the next month at least goes lower to retest that low, if not lower. It's relatively rare that you have a huge expansion of range on the monthly and you don't go somewhat lower the next month. Notice this month it didn't go as low, but it was still a down month. Here you had a big month down, and then you had a double bottom there. So it would make sense actually if this next monthly bar here in January actually looked similar to what happened here in some of these earlier cases where you had another shadow to the downside, but kind of equaling the prior month's low, which would put us where? Right at the trend line. So again, very, very key. 2300, excuse me, and 2200 are the keys, and I do think that over time we will move to that area, and once we do, then we could have a much firmer footing, I would say, to launch some longs from there. Okay, let's move over to the Dow. DJI, notice that it's got quite a bit more room to fall between there and its trend line, which I put just under the 20,000. Also a very, very ugly monthly bar. And last but not least, actually not last but not least, we'll go into the Russell as well, but we'll look at the NDX. Here, same thing. I think there's still room to maneuver to the downside. You got 2 areas here. Also the key 5,000 level, which notice is also a breakout point for the market. So I think we could easily move down to there. And now is last but not least the Russell, which again has been acting like a leader lately, and not much room left between that and its trend line. And also, as you're looking at all these trend lines, note that they are very key because they are the uptrend from the '09 lows. This is essentially the entire rally in the market, all right, all the way from the March '09 lows. This is basically it. So I think we do get there. Now, I'm just going to go back to the SPX for one more time. And the one thing I wanted to point out is, remember, if we were to bounce here, we do have a head and shoulders. And a head and shoulders on the monthly is very powerful. If we were to bounce here, I believe that we would bounce to a lower high. More than likely, we would connect the trend line, something like this. That would form the head and shoulders. I think that would be quite bearish going forward, as that right shoulder is lower. And then we would probably, move to target there. Okay, let's take a look at FANG now. Starting with Facebook, again, monthly. So notice the break here. Broken the long-term trend line, correct? Now this is starting only from 2013. It's not going that far back, but breaking the trend line from the base here of 2013 right here. So no idea where that could go lower or where that would go. Obviously, they've got a lot of problems. Amazon, let's just get rid of this. Sold off really big. Let's strike our trend lines here. I'm going to go from this low here. And so obviously we're not going from the '09, but notice that that trend line is there, and this trend line here, we still have room to go even to that one. So if we go to this, if we were to go that low, break this trend, Amazon could actually go closer to the 1,000 level. Don't think it could happen. Believe me, it could. Anything can happen. Amazon, we'll go to Apple next. I set an alert here for down in this area. There was a prior low there. Notice that this is also a possibility of moving right down into here, which puts Apple at a support at 120. Remember, a couple videos ago I said Apple was going to 150. It did. If you look at this monthly chart, there's actually a chance that it goes all the way down to 120, which would be a screaming buy. Let's take a look at Netflix. Again, same thing. Room to maneuver, probably to about the 200 level. If it loses that, we go to about the 160 level down in here. And last in the FANG stocks is, of course, Google. I think Google has been holding up pretty well. Notice I've got an alert set here for 875. Why did I set it there? Well, that's what gets me very, very close to the trend line, breaching the 900. And, of course, the same sort of head and shoulders pattern is already developing here in Google, which possibly brings us down to this level. Google actually probably looks the best of the bunch. It doesn't seem to be having as much of a downtrend. Notice that it's still here equal to these levels, hasn't really broken down the low. All right, let's take a quick look at some sectors. Let's look at XLF first, which is financials. So we can get rid of this trend channel now. Here, starting again from the lows, right there. There's March of '09. There's the two touches. And again, we still have some room to move. This also strikes me as more or less a bearish pattern. And we'll see if we get down into here on the XLF. So that's what you'd want to be looking at for GS and the banks, etc. Let's go to XLK now, which is technology. This is going to mirror a lot of what's going on in FANG. Again, we can start all the way from back here. I don't know if this is real or not. I'm going to put it here or not. It could be a bad tick. But if so, notice that if we go to here, that actually connects perfectly. It's probably that one. And the XLK could head down to 50 and catch itself there. Next up is energy. I think quite bearish. Notice that it's already broken trend from the '09 lows. This is, of course, because crude has been very weak. But to me, this is also a bearish type of pattern. Notice that you have this much lower high forming here. This is also just an incremental high here on a channel, and it seems like it wants to head lower. We could see energy stocks move down here where XLU would move down to 40. Obviously, that would mean just filling up this area from 50 to 40. Next up, we have semiconductors. Notice here, they actually have a long way to fall. I don't think they go all the way to the trend line. They probably catch themselves somewhere in the middle. So really, the trend doesn't matter as much. I mean, obviously, they just ran up so much. They're so far away from the trend line. But could they go all the way down there? Certainly over time. But that would take quite some time. And also want to look at healthcare, DJUSHC, which is healthcare. that fans out like that. This is also showing a lot of relative strength, so probably will not go all the way down the trend line around 600. Will catch itself somewhere maybe in this section where there's a lot of congestion. Obviously, these stocks have shown a lot of relative strength, being so far above the 2009 trend line. And last but not least, we'll end on the transports, this being the Dow Jones Transportation Average. Again, same trend line from the 2009 lows. And notice that also transports have just a little bit of more room to fall, similar to the majors, where they will catch support here in the mid 8,000s. So that could easily happen. Also, huge expansion of range on those transports. So in a nutshell, basically, when you go back to the S&P and the Dow and the NASDAQ, when we're looking at these monthlies, it seems to me like they have further to fall. Also, huge monthly bar forming in this December month. And as I showed you before, usually that does not bode well for the next month. Even if we don't make a lower low the next month, we usually have a down month the next month following that huge monthly bar lower.
All right, that's all for this week and also for this month and for the end of the year. The next Shadow Trader Video Weekly is going to come to you in 2019. Check your email this weekend. If you're signed up at our website, I'm going to send out a link to the performance and every single trade that's been done in 2018 of all the Shadow Trader advisories across the board. 3 newsletters plus the 2 option advisories. All of our advisories had a phenomenal year this year in 2018, and I'm hoping that maybe you guys will join us in 2019 if you have not already. Also, just a quick reminder, the Shadow Trader holiday sale only has 3 days left. You have until midnight, December 31st, to get 15% off anything in our store. And also, there's a special going on Window Trader. Window Trader is the market profile software that I use every single day. Those of you that are subscribed to my Peter's Pre-Market Perspective, you see snapshots of it every morning, and you see it also in these videos. For the first 3 months of 2019, you can get the Window Trader Blue version, which is the higher version. There's 2 versions. There's Blue and there's Light. Blue you can get for $40 off per month. You can just go to ShadowTrader.net, mouse over the Futures Market Profile tab, and click the Window Trader Market Profile Software tab. There's also the ongoing deal on Light, which you may want to take advantage of in 2019. That's always been discounted at our site. Same thing, just click on that same link and you'll see the instructions there. The coupon code is there for the discount on Light. All right, it's been a great year. Thank you so much for spending this time with me on all these videos. I look forward to more videos in 2019. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.